All right, all right. So it is almost the new year. It is December. At the time of this recording, it's December 30th. So if you see this, it might be the New Year's. It depends on when I decide to put it out. But either or, have a happy New Year, and hopefully you have a. I ain't gonna say hopefully. I pray that you have a successful 2025 and everything you worked on in 2024, it comes into fruition in 2025. All right. Be that as it may, I've been trading for a while. Um, and I'd be lying to myself if I said it's been a smooth ride. All right. I know you heard all the stories, but I'm about to give you a quick rant like I do every time. And it might be 10 minutes, it might be 5. We'll see. And then we'll get into a quick lesson right after this. So, of course, you already know it's been some ups and downs, twists and turns. But it was one thing in particular that changed my approach to trading forever. It changed my trading forever. I'm gonna be honest with, and helped me become profitable. I should say, it's a lesson that which I wish I had learned when I first started. But you know, a lot of the lessons you need to learn are along the journey. It's not at the beginning, because if that was the case, a lot of us would be more successful a lot sooner. All right, and I'm gonna be excited to share with you today if I haven't shared it already, but I'll share it again. All right, when I first started trading, I'm gonna be honest. I was military, so I thought I knew everything. I'm like, this is can't be easy. Buy high, sell high, buy low, whatever they want to call it. All right, I thought I knew it all. I was that guy who would jump into a trade without doing any type of technical analysis. I was like, oh yeah, this is easy. This is the low. I'm gonna just buy right here, boom, and the next thing you know, hit my stop loss. I didn't analyze charts without without thinking about the risk. I'd be driven by emotions. I was convinced that I would be making a killing in the market. I seen other people do it on YouTube. I had a friend who brought me into the game. I saw him doing it, and I'm like, man, I'm this old. I'm almost 40. I know a lot about the game. I know a lot about stocks, but this is a totally different, I would say not a totally different ball game, but this was forex I was jumping into. And the stocks I was investing long term. This was actually trading. And as you can probably guess, that approach didn't work out too well for me. And I lost a lot of money. I lost a lot of sleep, and I lost a lot of confidence because once you jump into this game, if you don't do proper, I'm getting ahead of myself. All right. And so I would get caught up in the excitement of the potential trade, and I would convince myself that it was going to be a winner. And I wouldn't consider the risk. I wouldn't think about the what ifs. I wouldn't bother to put a stop loss sometimes. I would over leverage. I would be reckless, and I was blinded by my own ego. And of course, I would end up losing money, like always, and I would be left wondering what had went wrong. And at this point in my career, when I first started, I didn't know what I was doing wrong, because I was like, I can't be wrong. I'm going to be 100% right. And I'm going to tell you, in this game, this trading space, you're never going to be 100% right. It could look like the perfect markup, and it'll go against you. But the biggest thing is your risk management. All right. And I studied. And after that, I studied a lot. This whole time, I'm going from strategy to strategy. And if I'm jumping ahead, my bad. All right. I would also fall victim to analysis paralysis. I would overanalyze the charts. I would read too much into the news. I would second guess myself. I would be afraid of making a mistake that would, and sometimes I wouldn't take the trade at all, and I would miss the opportunity. So it's kind of crazy is that when I would overanalyze things, I wouldn't take it, and that'd be the times I actually would have made profit. And then the times I didn't overanalyze and I would just take it, that'd be the times I lose. So it was getting frustrating. It's like, okay, I'm about to quit. I'm 2 years in, year and a half, 2 years in, I'm about to quit. This is ridiculous. All right. And I would kick myself for not taking the action. And what makes matters worse, I would get frustrated when I saw other people making money. And at this time, I was an IML, I think at the time, and I was, and I know it's part of a marketing tactic, but I would see all these mentors and all these people in the groups, they sharing, blues, and they sharing their profits, and I'm sitting here not making any profits, and I'm like, what in the world? How can they be so much better than me at this thing? And I know I'm not that crazy, I would try to trade based on other people's opinions. I know at one point I was taking signals from the group, rather than doing my own research, I would follow the crowd, and I would end up losing money again along with the crowd, and I wouldn't trust my own instincts. I wouldn't have the confidence to take a stand, and as a result, I would get caught up in the chaos and would lose control of all my trades. I know at one time in my life, in my trading career, not in my life, in my trading career, I was taking trades and signals from the group that I was in IML, and then they would make money and I would lose, and I'm like, this is getting ridiculous. What is going on here? You know, so I realized I needed to take responsibility for my actions at this point, you know, because I wasn't profitable at all. And I don't know the exact time frame, but it had to be about a year, 2 years where I just was on this, you know. Okay, I take that back. The first year and a half, 2 years, I think I had beginner's luck. I'm gonna say that because I was a little bit above break even. I was winning more and I was pulling stuff out the market. And I think at that time frame was COVID, so a lot of pairs were just trending upwards, so it was easy to make the money. I think once after COVID happened, around 2002, 2003, is when it really started to hit me when I started to lose. So I take that back. I do. When I first started, I think I had beginner's luck because the markets were trending. And then in the middle of it, right after that 2 years hit, that's when I stopped being profitable because I'm like, I got this. I'm good. You know, just jump in. I already know it's going up. And then at this time, I'm like, I'm losing like crazy. And then now I'm going to YouTube after YouTube after YouTube page, changing my strategy. I would win with one strategy, and then the next day I would lose. Then I would go find another strategy. And then I'm telling you, I look back and I had over 2,000 indicators that I was testing out. And it's not really that I tested them out. It was just that I would pick one, find out how to use it, use the strategy or the indicator and the strategy. And then as soon as I would lose, I would dump it and go find something else. See what I'm saying? So I went on a downward spiral on my third and fourth year of trading. All right. And like I say, again, I realized I had to take responsibility for my actions, and I needed to control my trades. I needed to develop a clear strategy, and I needed to stick to it. And more importantly, I needed to learn from my mistakes. And I think that was the big thing overall that helped me change my outlook on things, is that I had to stick with a certain strategy and back test it and forward test it and stick with it long enough to see if it was actually profitable or not. That's when I stumbled upon the biggest lessons that changed my trading mindset and approach forever. And it's a lesson that, like we all say, I wish I would have knew that at the beginning. All right, but it came later on in my career. And the lesson is powerful. And it's basically what I say every single time. And you need to hear this if you're just starting off, or you in that point where you're in a spiral and you're trying out different indicators and different strategies and you just can't get a handle on things, is also trusting yourself and trusting your strategy and trusting the process. The biggest thing I can tell you is discipline, patience, and perseverance. I said that before. I'm going to say it again. Discipline, patience, and perseverance. All right. Discipline is to have your strategy, all right, in line and only take trades on the time frame you're trading on. Me, is the daily time frame, so it might test my patience a little bit because it might take a day, 2 days, 15 days to find my setup on certain pairs. All right, and then staying disciplined, like I said, is to have your strategy in line from A to Z, 1 to 10, 1 to 5, and then the discipline comes in, like I just said, is to wait for your trade, wait for your setup that you have on your discipline part is the patience. All right, and then perseverance. Stick with it long enough and it'll work out for you. All right, you know what I'm saying? Because you'll learn little tidbits and lessons along the way. And then it's a lesson, like I said, of trusting yourself and trusting your strategy and trusting the whole process. All right, this lesson transformed me. And I know you like, man, I thought he was going to give us some secret sauce about, you know, how to make this and that. No, I ain't. I'm going to just tell you the real deal, how it was for me. All right. Discipline, patience, and perseverance. The lesson is these 3 things right here have transformed my trading completely. And I'm no longer reckless. I'm no longer impulsive. and I'm no longer driven by emotions. I'm no longer focused, more disciplined, and more patient. Now, I'm more confident to take my trades, and now I'm more consistent with my results. The reason I say I'm more confident is because I've stuck with this strategy, and I've used patience, and I've seen it persevere throughout countless of trades and countless of years. All right. So what can you learn from my experience? All right. Firstly, don't be afraid to make mistakes. You're going to make mistakes. So even though I was reckless in that little tenure of time, I learned from that mistake. All right. I learned to stop looking everywhere for the next shiny object and stick with one thing that really resonated with me. I finally found something that resonated with me because I'm prior military. I retired and I still work a job. So I can't be on the markets. Day trading. All right. Swing trading works for me on the daily time frame. All right. And just remember that mistakes are inevitable. You're not going to win 100% of the time. I'm just sorry if you're in this game and you think that's going to happen. I'm here to assure you it's 99% of the time you're not going to be 100% accurate on everything. You might have spurts where you're 100% accurate, but eventually you might take a loss. But when you take that loss, just don't get so frustrated that you blow up your account. All right, use it as a process and an opportunity to learn and grow. Secondly, don't be too proud to ask for help. All right. Seek guidance, seek mentorship, and seek support from others who have been in your shoes. And finally, don't give up. And I'm going to say that when I say seek guidance, seek mentorship. It's okay to buy mentorship, and it's okay to, seek guidance. But at the end of the day, you got to start reading for yourself. You got to pick up a book and read. Don't be so antsy about are so quick to just want to have the quick results. So I'm gonna pay this mentor. He looks like he making $1 million a month, so I'm gonna pay for him. He's definitely gonna give me results. At the end of the day, you got to read, you got to do the research, and you got to practice yourself. Nobody can do it for you. All right. Again, and finally, don't give up. This trading, I'm gonna tell you, is tough as hell, tough as nails, but it also can be incredibly rewarding. Stay focused, stay disciplined, and stay committed to your goals. All right, that's the biggest thing. We don't take nothing else out of this. Just remember, it is discipline, patience, and perseverance. All right. So I'm gonna get into the chart real quick, and then we're gonna go over something that I think I went over it a little bit. So we're gonna go over a little convo I had, and I'm good. I like to get feedback on my channel. All right. And shout out to Financial Minds Unleashed. Definitely had a nice convo on one of my last videos, and I'll link the video up here somewhere. But he says, I agree with you on the psychology, risk management, etc. But trading on higher time frame is trading on higher time frame. If you're new, is crazy. Higher time frames are more risk. And I responded with, I understand you're concerned about higher time frames being more risky, especially for someone new to trading. However, I think it'd be beneficial if used carefully. Higher time frames can actually reduce the number of trades, which might lower the temptation of over trading and can help focus on clear trends. Of course, risk management is key. It's about finding balance and not jumping into aggressively. All right. He responded with, I guess, it's a matter of perspective. Of course, everybody has their own perspective. All right. You can use higher time frames for confluence trends and etc. But trading is definitely more inherent in risk and larger stops. I said the key lies in balancing the risk to reward ratio effectively. Larger stops losses can be managed if position sizes are adjusted properly. All right, ensure the risk of any given trade remains within acceptable limits, even on higher time frames. It's all about aligning the trading plan with personal goals and risk tolerance and strategy. All right, so the biggest thing is I want to, I advocate for this. I advocate for the 9-to-5 trader. All right, so maybe I didn't, and it was good. I liked the convo, and he adjusted. He had his comments, I had mine. But what I do is for the 9-to-5 worker, the one who can't be on the charts at the New York or Asian session or London session. So, and I'm just going to explain this based off that comment. So first thing I will show you, right? So say you have, let's just go off a $500 account. I don't know if you can afford that. And I'm not talking to the one I was in the trading who made the comment. I'm just talking about everybody now in general. Let's say you have a $500 account, right? And let's pull this over. Let me pull this over here. Let me do this. All right, let me stop sharing my screen and let me do share my screen, entire screen, and let me pull. All right, here we go. Boom. And let me pull it up. All right, so if you see this right here, right? So this is a Euro CAD. All right, so if you go to myfxbook.com forex calculators position size, you know, this is for the brand new trader. So I'm glad he said that, because now I can break it down for any brand new trader who doesn't understand. So, and the reason why I advocate for brand new traders on the trading on the higher time frame is because, especially if you're starting off, you shouldn't be starting off live anyway. You should be starting off demo if you're a brand new trader, because starting on the higher time frames, it gives you slower movements, and you can learn price action better because it's more deliberate on the higher time frames, which the daily time frame. All right, so that's why I say that, because if you're a brand new trader and you try to jump in knee deep with the 15-minute time frame, the 5-minute time frame, it's going to be a little bit frustrating, you know, because you don't even know what type of trader you are at that point. You know, the first thing is you have to learn what type of trader you are. You know, if you don't have patience, the daily time frame is going to show you patience. So again, myfxbook.com forex calculators. You go to currency pair, just type in Euro CAD, USD. We're gonna just stick with a $500 account, and you do 1% risk to reward ratio, right? All right, so if you can see Euro CAD $500 account, risk 1%. We just doing 1% right now, right? Then the stop loss that I'm looking at is 136. And if you see down here, right, you're risking $5, and you have the units. Basically, it's a 0.1. All right, 0.01. All right, so if you look right here, I just made this. You know, it's hindsight. I'm basically not showing you the strategy. I'm just showing you okay. So look, we got it here, and we did. And let's just go off the ATR. Where's my ATR at? We're gonna just go off the ATR. All right, for risk to reward, and it's 14 p up 14. All right, so we jump in here. This is 95. All right, I'm sorry. So we'll do 950, 950. All right, so we got to go back to here and do my all right, here we go. All right, 95, which is probably gonna be the same thing. All right, now, but it's 753. All right, so we're gonna back test this. All right, and this is just to show you that. All right, what did we say? 725. Let's see. 1 second. 758. All right, so we're gonna do 758, and we're gonna buy. Plain and simple, right? 1% on this trade, 95 pips. You know, 1-to-1. I'm just showing you 1-to-1 right now. All right, if you look, all right, that's $7. $7, about the same thing. I'm not gonna get it so accurate that you know, whatever the case. All right, but if you look at this, you know, this is CAD dollars, but you know, they're not too far from us. All right, so it's all about risk. What you risk. Yes, it is 195 pips away, but if you risk a standard lot, yes, it's gonna be more. But that's why you go to, if you're brand new, hey, look, you jump in this trade, you know, you got $500 in here, and then you risk the proper amount. All right, so what I say, you can go to work and not have to worry about this trade being, you know, whether you lose or win. If you win, you up 507 and 29 cents. You know, if you lose, you down, you know, $7. So you about what, 493 and some change, 492 and some change. You get what I'm saying? So that's the whole thing I'm trying to tell you. So if you're brand new to the game or the trading space, don't be so scared to run away from, you know, a lot of people, man, use the higher time frame for, you know, the overall trend. Yes, of course. And then, I'm gonna go down to the 15-minute. No, if you're a 9-to-5 trader, I mean, if you're a 9-to-5 worker and you have a job and you can't be on the charts all day, you can come check these on the Asian session to close, because every candle is 24 hours, right? Every candle is 24 hours. All right. You place the trade on the 5th, right, of December, and you go about your business. Then the next day you come back on the 6th. All right. That Friday night when it closed, that night. And guess what? You made $7.29. Now think about this. I know the next thing you're going to say is, oh, well, man, that's not a lot. But I can tell you, if you put $500 in the checking account and in one day, it will not go up to $7 in funds unless you added the $7 yourself. It ain't gonna just sit there and gain $7 of interest fees or dividend fees that you had for the year. I had a lot of money in my account at one point. I mean, I have a lot of money or whatever the case may be. And then at the end of the year, I got 16 cents on this certain account that I had. See what I'm saying? So I'd rather take the $7 any day over the 16 cents. So this is not my strategy. I just wanted to show you exactly how it works, you know. And if you, the biggest tool right here is to use is the risk management and patience. All right, if you look right here, all right, EuroCAD 500, you know, if you start, you know, with $100, that's the biggest thing too, and 95 pips. All right, you can't go below 0.01. You can't go below that. All right, but at the same time, if you risking let's just say, let's do this. Let's do 536. All right, and let's go back and see what that is. That's units. That's the units. All right, if you trading on forex, I use the units. All right, so if you buy right here, right? All right, and then you right here. So regardless, if you lose this trade, you're down 5. You see, you're at 95 now, plus some extra fees from the actual the trade costs. Are you up $5? You know what I'm saying? Are you at 105, either at 95 or 105? See what I'm saying? So, you know, you don't have to go for these crazy amount of 200 pips and blah, blah, blah. You know what I'm saying? You don't have to go for that. You can go for 1-to-1s, you know, and if right here, I trade several pairs. This is all the pairs I look at. All right. Now, of course, if you're trying to trade, you know, the indices or commodities, you're going to need a little bit more than, 500 or $100 to be on the safe side when you're trading like gold or, you know, but these are just strictly forex pairs what I'm talking about. So now, yes, if you're looking on the daily time frame for, let's look at do I have it on here? Yeah. All right. So let's look at this. Okay, no, let's go back. Yes, if you do not want to over leverage for gold, see what I'm saying? So let's go to the next one. Oops, let me go back. All right. So if you just look, let's just keep it one bar. About 27, was that 27? 27 points, 30 points, some of that nature. And let's just say you run it on 1. All right. And you sell. All right. And you go. Okay. My bad, guys. I don't know what just happened here. All right. Let's try this again. All right. And then if you look at right here, so see what I mean? So that's still the biggest thing is what I tell you on, if you go on the lowest leverage, I mean, the lowest lot or the lowest point on the risk, the lowest on gold as well. But I'm gonna be honest, I would not trade gold, and I don't think a lot of brokers, unless you're an offshore broker, let you trade, you know, commodities with a low amount, because you need enough leverage to actually trade commodities when it comes to like forex.com or a regulated broker. All right. So my advice is to have a 500 to 1,000 in that account when you want to trade commodities, but you can't have 100 for like forex if you're risking a low on a daily time frame. But the biggest thing is that if you try to over leverage on the daily time frame and you have a $100 account, you're gonna be stopped out. All right, because you don't have enough margin to continue that trade. And I've been there before with forex.com, a regulated broker. They will stop you out, and they will send you an email of why they stopped you out. Basically, you got margin called on that. All right. So be that as it may, if you see this, boom, in one day, all right, and this is not my strategy again. I have a lot of other videos about my strategy. So that's the biggest thing, right? If you risk low, all right, if you risk low on the 1% of your account, you will be okay on the daily time frame. So to answer the young man or the young lady, whoever it is, I don't know who it was actually. To answer your question, yes, there is more. What's the word I'm looking for? There is more. You have to, let me see. There's more of a stop. Okay, there's a higher stop loss and a higher risk to reward. So I got filed up for a second. There is a higher risk to reward wise when you trade. So like right here, I look at my ATR. All right, it's 57. All right. So if I look right here, all right, and a lot of these are 57, 57, 100 pips. All right. Don't think you have to go for 200 pips, 300 pips. That's going to take a week, 2 weeks, 3 weeks, and maybe in a month and a half. But at the same time, if you have a decent size account like $500, you can risk 57. And let's 57 pips. All right. All right. So watch this on EU. This was October. Let's do November. All right. Let me get it out of here. All right. So just based off my strategy, all right. 1, look at this. 2, all right. And then we get in. Let me see what the ATR is real quick. ATR is 57. See what I'm saying? So I take this trade, 2 candle highs. All right. Look at this. All right. So what I would do is I go to my my risk to reward tool, and this is free online. If you go to myfxbook.com, all right, you got a $500 account, all right, and we was risking 57, right? And I only want to 57. I only want to risk, all right, 1%, which is $5. Units 877, sizing 0.01 lot. All right. Let's try that. 877. Let's go back here. All right. 877. All right. Let's do this. 877. All right. Sell. This is 1% of my account. All right. Look at this. Okay. Why did they do that? Let me go back. All right. Let's try that again. And sell. Stop loss. I see what happened. I went the other way. All right. Look at that. On November 11th, we placed the trade. Once the spread's lower. Another thing is don't take the trade right at 5 o'clock because you have to look on this top corner up here. This top corner will say the spread. All right. It will have your spread up there. All right. So normally in the changeover, not normally, every single day during the changeover, at 5 o'clock when the new candle populates, the spreads widen. Especially if you look at your broker, Euro USD might have a 0.2 spread or a 1 pip spread, no more than 3 pips for forex.com. But in the changeover, it might be 15 pips spread. So you definitely don't want to take it right there. You want to wait for about an hour or two to take this trade. All right. But now you take this trade on the 11th, all right, that night. Then you'll come back the next night, which is the night of the 12th. All right. That night of the 12th. All right. And guess what happened? Boom. It took you out in profit, $5 profit. Now you at $505.12. All right. Makes sense. Hopefully I made a little sense on that one. All right, and I'll continue to make these videos every single video I have. I will continue to beat this dead horse. All right, and I hope this made sense that now that if you're a beginner, you can trade the daily time frame and the higher time frames. I don't go past daily when it comes to trading. I use my weekly and my monthly for the trend. All right, the upper trend to see which way it's going. If all three align, then I will take that certain trade. But I take the trades on the daily time frame. As long as you use this tool, you will be okay. I can promise you that. The risk management tool. All right. Stop it, screenshot, do what you got to do. All right. So my advice to you is, even if you have $100, 1%, even if you have $1,000 bucks. All right, let's do this. Calculate. All right, $1,000. I know a lot of you guys don't want to hear this because it's like, oh man, that's only $10. I'm risking 0.02. All right, look, you just add it in there, you get to 10,000 one day. Now you at this. See, this helps you from blowing your account. All right, this helps you from blowing your account and growing it slowly. Okay, if you want to grow it fast, do your thing. But I'm not an advocate for that. I'm an advocate for protecting your capital. You get what I'm saying? All right. Other than that, hope you guys understood this lesson. All right. So, all right. Thanks for watching. All right. And I'd love to hear your thoughts in the comments down below. And shout out to the last person. We had a good conversation. I like that type of feedback. All right. And what's most important, the lesson you learned? And tell me what's the most important lesson you've learned in today's lesson as far as in your trading journey. Share your experience with me. I'd like to hear it. Make sure you check out the Discord group, and the link is in the description down below. And if you're new here, consider subscribing and trading, and for more trading tips and strategies. And I'll see you in the next video.